Hey everyone, Michael here. In today's video, I'm going to show you guys how to day trade and swing trade options like a pro. These trades are primarily going to be for about 36 to 48 hours. They are solid plays and you guys can make some really good consistent money trading options without having to worry about that pattern day trading rule, which can kill a lot of you guys if you're not careful, okay? Now, today we're going to be using the Apple chart, but this works for a lot of different charts out there, but please do make sure to back test. I use this a lot in Apple, so we're going to be using this right now, okay? I want you guys to go over here to Apple and I want you guys to go over here to the 15-minute chart, okay? Zoom out a little bit and then we're going to be adding only 3 indicators because we're not going to overcomplicate this, okay? So I want you guys to type in EMA and you're going to see right here, moving average exponential. I want you guys to click on this twice. 1, 2. Afterwards, I want you guys to click on RSI and I want you guys to add the relative strength index once. All right, and there you go. We're going to stretch this out just a little bit. And here's what we're going to do with these 2 exponential moving averages. For the first one, I want you guys to come over here to style and make sure it's green. It may be opened up on the inputs for you guys. Just go over here to style. It doesn't take too long. I want you guys to make sure the line is as thick as possible right there. And for inputs, I want you guys to make the length 50, okay? Source is going to be closed, offset is going to be 0, everything else should be staying the same, okay? Hit OK. For the next one over here, we're going to go over to chart, make sure that's the same. Length, I want you guys to turn this to 200. And I want you guys to come over here to the blue line and I want you guys to make it red, okay? Or you guys can change it to any color you guys want to as long as you guys know what each line represents. Hit red right there, make sure it's thick as possible and hit OK. The last thing we're going to change right here is the RSI. I want you guys to go over here to the inputs. Nothing there is changed. I want you guys to go over here to the style and all you're going to do is go over here to the upper band and the lower band and you guys are just going to make these lines a little bit thicker. Usually level 2 works, all right? Middle band can be level 2 as well. A lower band can be level 2 as well here. And it just makes it pop a little bit more, especially when you guys are like me and you guys are looking at your charts a little bit differently. I'm looking at this 150x zoomed in right now, but if I go back to 100, it can be a little bit small, a little bit more complicated. If you guys feel the same way, you guys can up them even more if you like, okay? Now, here's the strategy. Here's why I like it a lot. Now, and the basic premise, you're looking for one of 2 things to happen. When you have both things happen, you're usually going to be very, very excited about it, okay? Now, you're going to be looking for that 50 weekly, or excuse me, that 50 moving average on the exponential moving average there. You want it to cross above the 200 exponential moving average on the 15-minute chart. You guys are going to be looking at the 15-minute chart a lot here, okay? Now, when that happens, you guys are going to be looking to take long opportunities. You can see right here, long, short, or stop loss, excuse me. And what you guys are going to be doing is finding that low point right here, and that's going to be your stop loss, okay? And this example right here, you can see that we have a stop loss of about 2.37%, or if you guys were a little bit more conservative, you guys could have had that stop loss all the way up here for about 1.3%. I like to ride a little bit more risky, so to speak, so mine will usually be that little bit step down, but this can be a little bit more aggressive for new investors out there, so don't worry about it, okay? Now, for now, let's just say you guys are more inexperienced and you guys just want to take it easy, you guys don't want to go crazy, because you guys can see in hindsight this actually worked out pretty well. But then what you guys are going to be looking for are those aggressive levels of resistance. You guys can see right here, if you guys bought in this zone, there's a level of resistance here, a level of resistance here, and a level of resistance here. What I normally like to do, because I am going to be holding this for up to 24, 36, 48 hours, I like to go for the most aggressive spot possible, which in this case right here just happened to be right here. So we're gonna get rid of that line, get rid of that line, and that's your price target right here. Now, you guys can always hold on for a longer period of time than this, but here's where things are gonna be a little bit more different because we are trading options. You can see where this level is right here, that level of resistance. According to Apple, this is at 162. That's the strike price you guys should be aiming to buy those calls. If you guys are trading Monday or Tuesday, maybe Wednesday, I'll mostly say Monday or Tuesday, you guys can own Friday expiration calls. But if you guys are trading from Wednesday, Thursday, or Friday, you most likely want to hold on to the calls that are going to expire the following week, okay? You guys don't want to have theta kick your butt in the last few days because you guys are looking to build consistent wealth here. Now, after you guys have done that and you guys have hit your target, normally what I do is I just sell everything. However, if you guys like to let it go on a little bit more because you see it's an overall trend, here's where you guys are going to sell at the end of the day if you guys want to let it keep on riding and you guys are hoping that it would actually break out above that formal level of resistance. What you're going to be hoping for is this. that it simply stays above the 50 moving average on the 15-minute chart. The 50 EMA, that's your stop loss right now. If for whatever reason one day we end up opening below this, or we come down below it through the middle of the trading day, you guys are going to take all the profit that you've accumulated from buying around this 159 level. You guys are going to sell it maybe around 164 or something like that, and you guys are just going to take that home. It may end up doing a dip that continues to move up. That's not your problem. You guys are just here to make consistent profits, and this strategy is one of many that you guys can use to make money out there. Now, what is the RSI for? Most of the time, people think of the RSI as overbought, and oversold. However, once you guys have placed your trade, a lot of times it will actually stay above in the overbought territory here, and that's usually when I'm more likely to actually hold on to it. Okay, so you can see right here, this RSI, we're still overbought, kind of floating with that territory over here, but you're not selling because you still have this area over here. Once you start to dip back down a little bit more, that's usually where I'm saying, okay, maybe if I want to double dip in here, that'd be okay. But most of the time you have to come back to that, into that zero line here, okay? The other way I like to use this strategy is by zooming out a little bit more, and pardon me, you guys are probably not going to be able to see this as much as I would like you to, but what you're looking for here is you're looking for the RSI to be oversold, which is below 30, and you guys are looking for a strong level of support. And yes, you can have the strong level of support on a 15-minute chart. Let me show you how. Now, if we're zooming out like this, you guys can see a few levels of support out there. Normally, when I do levels of support and resistance, I show you guys just flat white lines like this. That's not what you guys are going to be doing in these types of scenarios. You're going to be looking at different types of buying zones here, because you guys are going to try to catch the bottom. This is an aggressive strategy for new traders to help you guys make some really consistent profits. So you guys would be looking at something like this, an old level of resistance, match it up with this other level of resistance, and you're just going to expand it out there, and you're going to see how well it works out, right? In this scenario, we had one level resistance, 2, 3, 4, and kind of finally broke out on the 5th try. So this is a pretty big level of support for us coming back. And you can see over here, if you guys were to buy in that zone as the RSI was dipping down below quite heavily, that's what you guys are looking for right there to go into an entry position. The one thing I'll note here, and this goes for both sides here, if the overall trend you can see is going up, if you do see a crossover like this where it's more of a bearish one, don't try to hold on to it for too long of a period of time, because usually it will end up having a reversal. In this scenario right here, you can see that we actually had a double bottom, a neckline break, and then off to the races we went. All right, this is an easy strategy. I hope you guys enjoyed. But again, if this is going in the downward trend and you guys see a long formation pop up, don't go against that trend. Stay in the overall trend, and you guys are going to be much better off. You guys may miss out on some trades, but if 9 out of 10 trades are working in your favor, that's all that matters, okay? Have a great day, everybody, and I hope you guys enjoyed the video.